Just when you think you've heard it all, something comes along that makes you stop and go, wait, what? Here's a story out of Georgia that has been making the rounds, and it involves state troopers, high-speed pursuits, and what appears to be an attempt to turn those pursuits into personal payouts. If you look this up, just type in Georgia Troopers Pit Maneuver Insurance Claims. You'll see coverage from insurance publications, mainstream news outlets, and legal commentary. The version I'm referencing was written by Greg Hoy for Law Enforcement Today. Here's the allegation. 4 Georgia State Patrol troopers were fired after an internal investigation revealed that they were allegedly filing insurance claims related to pit maneuvers they performed during police pursuits. Now, for those who don't know, a pit maneuver is when an officer intentionally makes contact with a fleeing vehicle in order to force it off the road and end a pursuit. It's a controlled tactic used to stop a suspect who refuses to pull over. It's authorized in certain situations. It's trained. It's part of law enforcement procedure. What is not part of the procedure is filing personal injury claims afterward. According to the investigation, one sergeant overheard troopers discussing pursuits as opportunities to get a check. That's what triggered the internal inquiry. What investigators reportedly uncovered was this: 3 troopers and a supervisor were allegedly working with a personal injury attorney. After terminating pursuits with pit maneuvers, they would provide crash reports to this attorney. The attorney would then send demand letters to the fleeing driver's insurance company, claiming injuries like stress, soreness, or anxiety. And here's the kicker. The original police reports from those incidents included statements from the troopers saying they suffered no injuries. On top of that, the demand letters reportedly did not disclose that the claimants were law enforcement officers involved in a pursuit. The letters targeted Georgia's minimum personal injury liability coverage, which is $25,000 per person, offering quick settlements instead of prolonged disputes. One trooper allegedly admitted to filing multiple claims and receiving 3 settlement checks, netting around $50,000 after attorney fees. Another trooper reportedly submitted over a dozen crash reports to the attorney, resulting in at least 2 payouts. He even described the practice as a way to supplement his salary, comparing it to off-duty work. Except this wasn't off-duty work. This was activity that occurred during official law enforcement duties. Now, let's pause for a moment and play devil's advocate. Is it possible for an officer to get injured during a pit maneuver? Of course it is. High-speed pursuits are dangerous. Physical contact between vehicles carries risk. But if an officer is injured in the line of duty, that's typically handled through workers' compensation or department insurance coverage. It's not something you privately pursue through the suspect's auto insurer without authorization. And here's the broader concern. Do we really want a system where officers might have a financial incentive tied to performing pit maneuvers? If there's money on the line, even indirectly, that could distort decision-making. The public perception alone is damaging. The internal report found that the troopers violated department policies, including prohibitions against accepting compensation for official duties without authorization and engaging in conduct that could damage the reputation of the agency. The report also noted that this behavior creates the perception that force was being used for personal gain rather than public safety. A spokesperson for the Georgia Department of Public Safety emphasized that these actions were not representative of the agency as a whole, stating that the department holds its officers to high standards of professionalism and integrity. The Georgia Bureau of Investigation has reportedly not announced a criminal investigation at this time, and the state attorney general has not issued a formal statement regarding potential charges. One of the fired sergeants has reportedly been hired by a county sheriff's office. The other 3 troopers were terminated. Now, here's something else that makes you scratch your head. How does an insurance company process a claim like this without noticing? If someone files a personal injury claim, the insurer typically reviews the crash report. In this case, the crash report would show that the claimant was the police officer who intentionally forced the insured driver off the road during a pursuit. That alone should raise questions. But there's another angle here. In some states, insurers are very concerned about large potential liability claims. If someone offers to settle quickly for policy limits, and they're willing to sign a release waiving all future claims, insurers sometimes choose to pay rather than litigate. A friend of mine who worked as an insurance adjuster once told me that there are situations where a modest payout is viewed as a risk management decision. The company pays, the claimant signs a release, and the matter is closed. It appears from reports that not every claim submitted by these troopers was paid. Some may have been denied, which raises another question. Did the attorney know which cases were more likely to result in payment? And regardless of the number of payouts, the bigger issue is this. Every improper insurance payout ultimately affects policyholders. When insurance companies pay out on questionable claims, the cost gets spread across all insured drivers through higher premiums. That's one reason insurance fraud is taken so seriously. If these allegations are accurate, it's not just an ethical issue within law enforcement, it's a cost issue for everyone paying auto insurance. And let's be clear, the evidence trail here is likely straightforward. There are crash reports, there are demand letters, there are settlement records, there are internal policies. If someone files a claim related to an incident that occurred during official duty without proper authorization, that's going to be documented. It's a strange story. It's not something most people would ever imagine happening. And yet here we are. High-speed pursuits are serious matters. They involve risk, judgment, and responsibility. They're not supposed to involve personal financial gain. If the internal findings are accurate, this was a handful of officers making very poor decisions. It will be interesting to see whether criminal charges follow or whether this remains purely an internal disciplinary matter. In the meantime, it's another reminder that insurance systems, law enforcement procedures, and ethical boundaries intersect in ways most of us don't think about until something goes wrong. Questions or comments, feel free to share them. Let's talk about it.